The star today, I think, somewhere is India Bull Real Estate, largely because of that buyback which they are considering. But it's all about the broader market. And Ajay, whichever way I slice or dice or chop or peel, there is excruciating pain now in some of the ranked mid-cap stocks. We may be in a underlying bull market on the Nifty, but in the mid-cap space, it's like a bear market has started.
Nikunj, that is the true picture of the market right now. In fact, a very big, large veteran trader yesterday was saying that Nifty is just 2% away from its previous highs, but small and mid caps are going towards 2008 lows. While that comparison may not be exactly true, but the fact of the matter is that look at Vakrangi down 70%, anywhere between 35% to 70% loss in last 3 months alone in some of the mid caps. And this is a real loss, erosion of wealth as far as retail HNI investors are concerned. What we have done is we have not only taken out a list of the kind of stocks which have gone, Balrampur, DCM Shriram from Sugar Pack because poor results and cycle turned, Jet Airways because of crude oil prices going higher, as well as Indigo. And look at how Delta Corp, with even despite of good numbers, HNI liquidation and margin call triggers has eroded capital over there. There's also one category which is corporate governance issue related stocks like HCC, Vakrangi, PC Jewellers. But then again, the all-time favorites of bears with debt-related issues, Adani Transmission, Adani Power, ADHG Group stocks are back at the list. So if you look at the factors which are at play right now, the combination of debt issues, rupee weakening because of overseas debt, corporate governance issues, forced selling by some of the lenders, be it HNIs or in promoters, all these issues are coming together right now, and a very large, painful bear market is going on in a very large section of the market, which is mid cap and small cap.
So where do we go from here? That is very important. Gautam Chowcharia, good morning. Thank you for joining us. So Gautam, why is there such an excruciating sell-off in mid-cap stocks? Mid-cap stocks, I mean, we can always pick up handful of them and talk about a large fall, but the fact that the tide has turned for small and mid-cap stocks is quite worrying.
So a few reasons possibly. One is the starting valuations were becoming almost near frothy zone, not just rich for a few mid-caps, small caps. Secondly, when we seen the macro headwinds go up for India, that also hurt the local sentiment a little bit, and people had made a lot of money in small mid caps. So normal tendency to book profits there rather than keep hoping for more upside there from frothy valuations. So I would say these things. The last thing I would say is also the foreign investors flows have been weak this year. Both in absolute terms as well as in context of global emerging market flows. Keeping that in mind also adds to the negative sentiment for this asset class for local investors, including HNIs, mutual funds locally.
So Gautam, I mean, where is it that we're headed from here? Do you sense that some of these mid caps which are falling because of no reason and are fundamentally sound companies are almost reaching that rough point wherein you would relook them for a buy, or do you think there is still some more pain to go for mid and small caps at large?
So mid small caps as an asset class is always tricky to have a single view. There are always bottom up opportunities. As we've seen even in this correction phase, there are mid small caps which have done well in absolute terms also. So as an asset class it's tricky, but yes, in terms of if we want to stretch that argument, mid small cap indices, if you look at the valuations both in absolute as well as relative to large caps is still not at a level where we would say go overweight mid caps. So in our portfolio we still underweight mid caps from the broader market perspective, but yes, select opportunities always are there.
Gautam, how are you approaching the markets post this earnings season, especially, what we are, I mean, you've already highlighted the fact that there's been a big carnage in the broader markets, but do you think that one should be a brave heart post this earnings and look at value plays in the market, or is it going to be, still keeping it with the safe bets, which are the high growth companies?
So it will be a mix of many signals, the global signals, which will still be the dominant driver possibly. The local signals, the earnings season in fact has been reasonably okay this time, with many consumer facing businesses reporting positive surprise on volume growth. which is a very strong positive. On the other hand, what we also will see in the next few months is any potential support to rural economy from the government in terms of stimulus or fiscal expansion, etc. And the various models which we have elaborated, analyzed in our recent note, including the model followed by MP or Telangana, etc. And that would have a bearing on how the growth and specific mid-cap, small caps do, and the broader markets too. And lastly, obviously, the narrative around 2019 elections. So while the next 6 months we will not see any political elections being there, but we're just a year away from the national elections, and I think that narrative around Mr. Modi coming back or not next year will be a driving force for market sentiment and multiples for the next 12 months.
In the tail, it seems that BJP has now reached out to HD Kumaraswamy, so it seems like they too are extending a handshake to the JDS alliance, and this definitely could be after a follow-through from yesterday, wherein Congress and JDS wanted to tie up, join hands together, and then perhaps, be a stronger party. And this cliffhanger really continues. You still don't know who is going to back the chief ministerial seat in the Karnataka parliament. Gautam, do you think that this is an event which is playing on the minds of the market, or do you think it was well priced in with that 1.5% volatility that we saw on the index, and also the fact that mid caps, after having started off the day very well, fell pretty sharply from the top of the day? Is it done and dusted with, or do you think if it's not BJP bagging the Karnataka seat, we could see an adverse reaction from the market even now?
So the markets are pricing in that the BJP will form a government in Karnataka. But beyond Karnataka, it's not about whether they form a government in Karnataka or not. I think the bigger narrative here is what it means for 19 elections. And that's what will drive the market reaction. So if the Karnataka outcome ultimately starts showing up that the JDS and Congress are getting together, then it does add some level of discomfort around the Modi narrative for 19, because what we have been highlighting since last few months is that India, given first past the post system, what is much more important for investors to track is the fragmentation or unity among opposition parties. And that will be the bigger delta in terms of the possibility of this government coming back in 19. Markets clearly hope for and are pricing in Mr. Modi comes back, given the strong track record of reforms over the last 4 years, which has helped improve India's macro and growth outlook. And that's what the markets are hoping to be repeated in the next 5-year period.
So, Gautam, do you think we are done with the highs for the year, and it's going to be perhaps very difficult for markets to go to the previous high and then stay above that?
So going above the highs is not too much from current levels. It can definitely go there. You need 4-5 days of strong flows or strong buying, so not a big deal. But yeah, fundamentally our base case for Nifty for December 18 still remains 10,500. And if I look at our upside downside scenarios, also the risk reward is definitely not attractive here. So our recommendation to investors is not to get in or buy at these levels. Surely they will get better opportunities later in the year.
When we started the year, I don't think anybody was penciling in a uptick in crude of 20%. Nobody was penciling in a 70, 80 or even 100 bips uptick in bond yields. Nobody was penciling in a LTCG. Yet markets have been strong. Yet markets have mustered a lot of strength. The big stocks, which were expensive stocks, have even become bigger, and the P multiples for HUL, Asian Paints, even for that matter Maruti, has only expanded. So I wonder why markets are getting more and more polarized. Expensive stocks are getting more expensive. Even though concerns are mounting, we've not seen a large meaningful sell-off.
So exactly as you said, it's a mix of rising macro concerns, but still strong inflows. So if you have inflows, you have to buy stocks. If you have concerns, then you try to hide in quality. So exactly that's what's playing out. And as for the markets, as long as the flows remain strong, the markets may not correct in a big way. Even with India's rising macro concerns last few months, the global macro backdrop has been quite supportive in the sense that we have seen risk assets being largely been okay. emerging markets have seen more than $50 billion of inflows. And that's why we haven't seen any major outflows out of Indian equity markets despite some concerns on valuations and macro. So the key here is the sentiment and flows. So sentiment has taken a back seat over the last 2-3 months given the macro concerns, but the flows remain strong, and we still haven't seen any desperation amongst investors globally or locally to really start cutting down exposures in India.
So Gautam, what should be the approach for the balance of the year? At a time when you've got dwindling macros, there's still a little bit of a question mark on which way globally things are headed. So far so good, but who knows? Crude is a big cause of concern, which is also weighing heavy on our macros. And then the political uncertainty that you rightly highlighted. Yes, the micros are beginning to look up, but again, this is not very broad-based as of now. Do you think you buy more of the same and that would be the right approach, more of HDFC banks, Marutis, TCSs of the world? Or do you think it's a more bottom-up approach that you could look at given how stark the correction has been in a large segment of the market?
So I would say a mix of both. Clearly in this backdrop, the well-held quality names will do well. But there are select bottom-up opportunities sectorally and stock-wise which investors should position, because any which way you look at it, the long-term story for India still remains intact. Even the global growth outlook, while there is debate about a synchronized recovery or lack of that, but it's nowhere the outlook is that we will see a big recession anytime in a hurry globally. So the backdrop is still okay. And therefore, don't be in a panic state where you sell out and get out in a hurry. But yeah, to look at the right stocks, and for the broader market, look at the right levels. So bottom up always works in India, and in this year also should continue to work in India.
Okay, give us your own sense on how you would be approaching the entire consumption theme, and how you would select stocks within that, because as we saw with HUL's numbers, there seems to be certainty of growth, but it comes at a price. Even for that matter, Britannia's numbers. So how do you go about separating the wheat from the chaff and getting evaluating a value opportunity there?
So that we're looking at two ways there from fundamentals. One is, in general, the rural exposed businesses should do well. Because whether we see a major policy support for rural, or we continue to see more rhetoric than actual money being spent, any which way the rural sectors will be supported well in this year ahead of elections. So the commentary there should be positive. So those businesses should do well. And secondly, companies or specific companies on a bottom-up basis where we are seeing clear signs of normalization of supply chain, gaining market share from informal sector as GST, e-way bill, etc. gets rolled out this year. Those will be the other opportunities from bottom-up fundamental perspective. And then we overlay that with where these stocks multiples are compared to recent history, medium-term history, and how the stocks have done, and see what they're pricing in. And that does throw up interesting bottom-up ideas from that space, and that's what we will stick to.
So Gautam, give me a sense as to where value has emerged in the mid-cap space now.
So there's no space as such, but yeah, bottom up, there are opportunities where we have seen segments where we haven't seen, like you mentioned earlier in the fourth quarter numbers, the micro picking up is not broad-based. But are there signals for sectors or stocks where those signals are not yet present, but comparable sectors or stocks, the signals are already visible? So then that would be an interesting area to look at, whether those signals will start happening in the next couple of quarters. And that's where the value is, because the markets are not pricing in that recovery. Markets are reacting a lot more very, very clearly in terms of immediate numbers, not necessarily so much in terms of forward looking. So it's reacting very violently, I would say, in terms of the 4Q numbers on both positive and negative side, and less about where the forward looking could be. So there are opportunities clearly.
Gautam, great speaking with you. Thank you so much for taking the time out and analyzing what the market could be staring at from now.